Welcome to a Real Estate Wisdom podcast, where we break down complex real estate concepts to help buyers, sellers, and investors to make informed decisions in the Greater Toronto Area real estate market. I'm your host, Vishal Kapoor, and today we are diving into a crucial market indicator, months of inventory, along with other essential terms you need to know. Interest rates is coming down, things are moving, things are getting better. But where we are right now, how long is taking for house to sell? And which type of house taking longer to sell and which are selling quicker than the other? So for that, we have to understand the month of inventory. So how many months of inventory we have, which means how much month of supply we have, which is a key metric in real estate that help us gauge market conditions. And here how it works. The formula is very simple. Months of inventory is equal to number of active listings, which means in how many listings are active in the market, divided by average number of homes sold per month. So, for example, if there are 22,653 active listings, which was the data from TREB last month, from August, and 4,975 homes sold in a month, the calculation would be 22,653 divided by 4,975 is equal to 4.55 months of inventory. But single family home are selling faster compared to the condos. What's the single family home? Single family home, I will say, is taking around my numbers over here. When I'm doing the calculation, current average is 22 days to sell. So definitely when we average out things with all the inventory in the markets, that was coming to 4.55 month. But what that actually means, what actually it means is basically giving some interpretation. So less than 6 months is seller's market. Around 6 months, it's balanced market. And more than 6 months, it's buyer's market. That's the industry formula which we use. And that's how market shows. So with 4.55 months of inventory, the GT is currently leaning towards a seller's market, but it's closer to a balance. So I will say in the more balanced market. Again, if we segment in the condo market, definitely is a buyer's market for sure. But if you're looking into a single family home, which we call a townhouses, detached homes, bungalows, all those ones over here, they are still in the seller's market. However, the prices have telling the different story. But it's more, I will say, the closer market. We got so used to property selling so fast and quicker that, we got used to and say, it's taking longer and market is really not moving. So this indicates that while sellers still have some advantages, buyers are gaining more options and potentially more negotiating power. And we have seen a month of September, I'm just looking at the current data, inventory have increased. Soon the announcement regarding the interest rate happen, another cut, and hoping that another rate cut is going to happen in October, end of October, that maybe go half basis point because Fed from US also, they already cut their half basis point. So most likely that will happen, but 80% chances I will say, and 20% is still might happen the 0.25% only. The other term which we use a lot is sales to new listing ratio, which is also called SNLR. So definition for SNLR is compare the number of sales to the number of new listings over a given period. So calculation happen, SNLR is equal to number of sales divided by number of new listings. So current GTA value is 39.7%. Interpretation of that, below 40% is buyer's market, 40 to 60% is balanced market, and above 60% seller's market. So at 39.7%, the GTA is just on the cusp of the buyer's market. And this suggests that new listings are outpacing sales, giving buyers more choice and potentially more leverage in negotiations. Negotiations are happening a lot, definitely all the conditions you're putting in there, financial conditions, and you're also waiting for appraisal to come, because a lot of time it happening, the appraisal's not coming. Houses only sell when its price is right, because in any market condition, if its price is right, and realtor and sellers reacting towards the market correctly, property will sell. So other term which we use most of the time, like average day on the market, the metrics indicate how long properties typically take to sell, and current GTA value is 44 days. So what's the significance? The average day on market has increased from 28 days in August 2023 to 44 days in August 2024. And this increase suggests that properties are taking longer to sell, which could be due to various factors such as increased inventory, changing buyer preferences, or economic conditions. And, when we're doing, again, this is combination of all the data, not only just single family home, is also the condos, which definitely take way longer to sell. Now, the other term which we use is called Home Price Index, the HPI. The HPI price trends more accurately than average or median prices by considering the characteristics of homes being sold. So, and this combined a lot of other factors, right? So current GTA trend down 4.6% year over year. So I will say this is a more indicator how much price have down from last year at the same time to now, which is 4.6. So this decrease indicates a slight cooling in the market compared to the previous year. However, it's important to note that this is relatively small decrease given the historical price growth in the GTA. We have seen tremendous growth after COVID until 2022 May, right? 2020 May, and after that, the market was going down when the interest rate starts increasing. Now, looking to the other thing is benchmark price. Benchmark price represents the price of a typical home in an area based on various characteristics. So in current GTA value is $1,082,200. The significance, the high benchmark price reflects the The high benchmark price affects the continued desirability and high cost of living in the Greater Toronto area. And it's crucial for buyers to understand this metric when budgeting for a home purchase in the region. So as we know, the government also have increased it 1.5 million for first-time home buyers, which they can pay less than 20%. So that's the indication, the government already know what's going to happen. Prices is already in $1.8 million in the high market. So that indicates in the future the price it can go up to these average to 1.5, right? So be ready for that. Value of money is going down, in my opinion. So if I'm looking into the one of the graph which we have created, maybe I'm able to share that if my editor able to incorporate that. The benchmark price stand out as significantly higher than the other metrics, illustrating the high properties values in the GTA. We all know that, right? The month of inventory, again at 4.55, is below the balanced market threshold at 6, indicating a slight advantage for sellers. The sales to new listing ratio, while not shown in the graph, is at 39.7%, just below the 40% threshold for a buyer's market. And the average days on the market has increased to 44 days, which is reflected in the graph and supports the trend towards a more balanced market. And the MLS Home Price Index decreased 4.6%, isn't directly shown in the graph, but aligns with the overall market cooling trend. Now, looking into what's the market implications. For buyers, more choices with increased inventory. Yes, buyers have a lot of choices right now. Potentially a more negotiating power, definitely, and they have more negotiating power right now. A slightly longer time to make decisions as properties stay on the market longer. The buyers taking their own time, and it's hard to decide sometimes, like when you're looking to in this volatile market, that if I'm buying it right now, am I buying at the right price? If the price is going to go down more, in my opinion, like the prices will not go down more. Not talking about the condo, I'm saying about like a single family home. Condo market is unpredictable right now, but price is not going to go that down much. But I also mentioned that to a lot of my clients and listeners. People ask, like, when is the right time to buy? The right time to buy is when you're ready, when your finances are ready. The other things which you have to consider is that you're not buying the house for 1 month, 6 months, or a year, or 2 years. Most of the time, average people, and this is the national data, people live in the house for 5 to 6 years in one house. So you're buying this property for average level select for 5 years, right? What do you think? In 5 years, the price which you're going to pay today is going to be lower than today's price? I don't think so. With the population growth, with the growing real estate market and everything, you're still going to make money. You're still going to build your equity. I know for the shorter period of time, you will pay a little bit more interest, and that's why I'll suggest when the market is like this, if you're doing the variable, because prices already know that interest rate is coming down, and then you can lock it later. But once the interest rate gone significantly down, then the competition is going to increase, and then you're going to pay more price. So in my opinion, if you are ready, this is a good time to buy. And if you want to wait, you can wait. Your choice. For sellers, they still need to be more competitive with pricing. Should expect properties to take longer to sell, which is happening, like slightly coming down in some cases. Fall market is still didn't pick up like what we were expecting. Let's see in October what happens in next 2 weeks or 3 weeks. Otherwise, it might happen that the market will stay like this, like in the balance until spring of next year. But sellers still in relatively strong position due to high benchmark prices. So your threshold is still like high. And if you can't afford it and you're having a hard time paying those interests, and it's a good time to sell. I know that you're anticipating for 3,000 square feet house to sell it for 2.7, 2.8. But right now, if it's selling for 2.2, it's a big, huge difference, right? But that was a peak time. I think that coming to that peak time is going to take a lot of time. That's for sure. It's not going to change overnight. It's not going to change next year. So if you're struggling and you don't want to struggle, and if you're thinking of selling, this is the time. You can still sell it. You're still making money for sure, because the prices didn't come down yet to pre-COVID time. So if you even purchase after COVID, in the peak time, and you think definitely you have to do the calculations, commission, and maybe I can talk into next episode regarding the net operating net earning which you're going to get from there, right? Because a lot of people don't think about that. They don't think about the taxes they have to pay. If they have any capital gain, they have to pay if they're investor property, not on the primary home. They don't calculate their lawyer fees and closing cost. And it's end up, they were thinking what they're going to sell it for, but they didn't get enough money, what they needed, and they find it's loss. So you have to do those calculations. Sit down with your accountant to figure that out as well. Or your realtor. You reach out to a realtor, professional realtor, so they can give you that net profit which you're going to get out of it. For investors, I will say still need to carefully consider long-term trends and potential for appreciation depending upon type of property which you're going to buy. There's some opportunities out there for sure. I will say a lot of opportunities out there. But depending upon your risk level, how much you can leverage, but this is the time when you can negotiate. Rental market dynamics become increasingly important in investment decisions. So you look into what's the trend is going on in the rental market. So in conclusion, the GTA real estate market is showing signs of balancing, moving slightly away from the intense sellers market of recent years. However, it remains a complex and dynamic market with higher property values. Buyers, sellers, and investors should use these metrics in conjunction with local market knowledge and professional advice to make informed decisions. I hope it's give you some insight to you in this episode, what that really means. And if you have any questions, you can always reach out to me to find out what that really means. If you're in the market of thinking about selling a single family home, then which I mentioned is taking from anything from 22 days to 30 days to sell, which is normal. Overall, can take up to 44 days, which is still good. 1.5 months is not a bad thing for property to sell. Have to have a patience for sure. Make sure your property is well maintained. Now the fall is here, and you can show your house pretty well as well. This is a good time to take pictures because it's beautiful out there before all the leaves are gone. So maybe a good idea to take pictures right now, even you're thinking of listing later. So you can showcase your property in the best condition to buyers, right? I'd love to get more questions for you. And this is the question just came out the other day, that what is, this we talk about month of inventory, days in the market. So I thought I'd give you some terms. In the coming episode, I'm going to do a little bit more about the other terms which you like to know, and going to educate more if you are new to real estate. People who are in real estate and investing, most of the time people know. Sometimes they don't know. So if you don't know, you don't know. And then you just speculating what's going to happen, when the market is going to go down, what's the current condition of the market, because we only hear the news media and we look into the global scenario. But it differs from city to city, town to town, area to area, type of houses. It all depends what kind of house you have. So I hope like I have provide some value information to you guys. Please do subscribe, like, comments, and share with your friends and family. I'll be very grateful. Thank you for watching. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.